And how are you doing? Thanks so much for joining us today. My name is Greg Lewis. I am the marketing manager for MetaStock, and I'm pretty sure we're live and broadcasting right now. If for some reason the audio is not quite right, or if you don't see the video, go ahead and let us know in chat. But the first thing I'm going to do is the first thing we always have to do. The first thing I'm going to do is just tell you that in case you're expecting one Jeff Gibby to be here, who usually hosts all of our webinars, he had another engagement, so I've gone ahead and taken over his very important duties. And the very first thing I'm going to do now is talk about our disclaimer, which I'm going to click to. All right, this demonstration is designed to instruct you on using MetaStock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or solicitation to buy any security. Man, that's a mouthful. I think we all get what that's saying. Don't do dumb things when you're trying to invest. Comes down to it. All right, I'm really pleased to tell you that today's presenter, Kevin Nelson. By the way, Kevin, I took that picture of you. I took that picture of Kevin in Florida. Kevin Nelson is our presenter today. I have a long-standing relationship with Kevin because Kevin has a long-standing relationship with MetaStock. He worked for MetaStock when I got there 20 plus years ago and was for a long time MetaStock sales manager. Since that time, he's decided to move on to greater things. And as part of that, he's opened his academy, which is called LearnMetaStock.com. And over the years, Kevin has become quite the expert on MetaStock, how to train in MetaStock, and trading generally. As part of the training for any new MetaStock employee, they're required to attend Kevin's training to really get up and running with our product. That's how great Kevin is. And I know, by the way, I've listened to Kevin many times, and I've listened to many presenters throughout the years. And I have to say, he's one of the most listenable and enjoyable, and really gets down to the brass tacks of the matter. So I'm sure you're going to enjoy it. With no further ado, Kevin, are you there?
I am. Thank you, Greg. Well, first question is listenable. Is that a word?
Yeah, I was trying, I'm on the spot. I don't do this a lot. Just so you know, I'm normally, so everyone knows, Kevin knows this, I'm normally the guy behind, pulling the levers and pushing the buttons, and doing this and doing that at the same time can be a challenge. I'm not going to lie. But Kevin, did I miss anything important? I don't think I did.
No, that was good. That was really good. I appreciate it.
All right, then I will get out of your way and let you have at it. I hope you know how to change the presentation to yourself, or do you see that on your screen?
I'm going to try. I'm going to try to share my screen.
To tell you that before we got started.
There we go. Let's try that. Let me know if this comes through.
I know that if Jeff was here, he'd know. Oh, I'm looking at the wrong screen. So, okay, yes, I do see. Let me get out of the way.
Okay.
And I see let us help you learn MetaStock so you can trade smarter sooner screen.
Very good.
Okay, have at it, Kevin.
All right. Thanks again, Greg. I really appreciate it. Yeah, as Greg said, I've been with this company with MetaStock now for, gosh, I don't know, coming up on 30 years, I guess. It's pretty crazy. Anyway, long story short is that at Learn MetaStock, that's what we do, is we just try to help people with their programming in a lot of different ways. So what I'll do is I'm going to just go through our presentation here first, and then afterwards I'll give you just kind of a quick rundown of our website and different ways that we can possibly help you there. So as always, if you have any questions during today's presentation, let me know. Just send me a message in the chat window, and I'll be more than happy to try to help you out here as we're going through this. All right, so what we're going to be talking about today is what's called the Turtle Trading System. If you haven't heard of the Turtle Trading System, it's a system that actually was developed back in the early 80s. It's a really pretty interesting concept here, and I got a pretty interesting backstory to say the least. So I'm just going to be touching on it briefly, but if you'd like to learn more about it, there's quite a bit written about it. I'm sure there's a ton of videos and so forth that you can go up and take a look at as well. But one of the original students of this trading strategy, his name was Curtis Faith, and he has written some different things that you can either purchase, and I think there's actually some free PDFs that you can download and so forth that'll really explain the ins and outs of this, specifically how to trade this particular trading strategy. So how this whole thing came about here is that back in the early 80s, there were two futures traders, Richard Dennis and Bill Eckhart, who were futures traders who had been trading for years and years and were very, very successful traders, to say the least. They got into a discussion about whether traders could be made and or are traders really just kind of born with the inherent skills to trade themselves. And they went back and forth about this, and what they decided to do is they literally decided to experiment with it, and they placed an ad in the paper to identify, if they could try to figure this out. And what they found out is that when they placed this ad, they received over 1,000 different applicants there for this for their idea here. And the idea is that what they'll do is they'll actually provide the training to become traders. They'll provide the actual accounts, and everything else that they'll need. And this is very, very well funded. And they received over 1,000 applicants. And out of those 1,000 applicants, they chose 23 individual people to become their students. Now, these students, they were nicknamed the Turtles. And this is where the Turtle trading system, this is actually why it's named that, is because of this nickname that they gave to their students. So all their students, again, were just called the Turtles. Now, this particular trading strategy that they had here was actually very straightforward. They were really only given a few different things that they could personally choose on how and when to trade and so forth. But as far as the actual trading systems themselves, they were only given two options. And out of those two different options, there was absolutely no second guessing of these systems. And anybody who did second guess it or didn't follow the rules specifically were actually asked to exit the program. Now, the systems themselves they were designed to actually trade in the futures market. And this is, of course, what Richard and Bill were both very, very familiar with. And what they traded, of course, is they traded coffee, cocoa, gold, but the students could also trade treasuries, silver and so forth. Now, these two different systems that they were allowed to trade are very, very simple, or very basic, and they're based off of either 20 and or 55-day breakouts. And the idea is, let's say, for example, like if they're interested to purchase or go long, for example, they were looking at the prices of the actual futures contract to break above a 20-day high and or a 55-day high. And that was basically it. And then, of course, on the other side, if they're looking to go short, they were looking for the prices to break down below a 20-day low and or a 55-day low. And that's pretty much it, kind of in a nutshell. Now, there's a lot of other little things that are built into the system there, but the actual idea or the trading strategy itself is built around a very, very simple concept. One thing that I found really interesting when I was researching this is that the idea of actually taking the trade could only be placed if the previous trade was unprofitable. And this was, again, like I say, I caught this as a pretty interesting concept because, as most people they want to be right all the time. They want every trade to be a winning trade. But the way that they approached it is that, again, the only time they could take a trade is if the previous trade was a losing trade. Now, what they did as far as the actual trades go is that these trade sizes of what they traded and so forth were actually sized based off of volatility. And there's a number of different things that the traders had to answer or be able to answer before they ever entered into a trade. And one very important concept was the volatility of the items that they were trading. If it was a very high volatile type of market, meaning the prices are really moving around quite a bit, they were instructed to go in with lower positions. And vice versa, if they had lower volatility, then they were instructed to go in with larger positions. So again, depending on the size of what was happening in the market, that's what then determined the size that they were actually placing. Now, in addition to that, they also adjusted the sizes as well based on what was happening with the actual trade itself. So if the trade was proving to be profitable, they would add to these positions, and vice versa. They would scale out. And as far as like getting out of positions, they had 3 different actual situations where they could were instructed to actually exit the trade. And the biggest one was a maximum risk of 2%. And you probably have heard this concept before. This is, again, this is a pretty standard one that's being taught, throughout the investment world, and that is never risk more than 2% on any individual trade. And this was a hard and fast rule for this trading system. So if any of the students did hit a risk or hit a loss of 2%, no matter whatever else was going on, they were instructed to actually close down the trades. Then the other things that they were instructed to exit on was based on the highs and lows. So for example, what I'll show you here in just a second is that the way that these trades are structured is that based off of, say, for example, like a 20-day high, if the prices are moving up, the prices break above the 20-day high, they're instructed to basically enter into the trade. But they also had a lower band as well. And if the prices broke below the lower band, they're instructed to get out if that happened. And then in addition to that, another indicator, which is called the ATR. And for those of you familiar with it, that's what's called the average true range, which is an indicator, which is another indicator that most technical analysts and so forth are familiar with. It's a volatility based indicator that does a really good job of identifying, how far the prices are moving different periods of time. Now, let's go ahead and jump over to a chart here. Let me go ahead and open up a chart, and we'll begin taking a look at some different ones. So what I'm going to do for this example is I'm going to open up an ETF for the S&P 500, which is the symbol is just SPY. We'll go ahead and open up our chart, and we'll take a look at this one. Now, inside this chart here, as you can see, I'll kind of zoom out here so we can take a little bit more of a kind of a bird's eye view. But we all know kind of what's happening here in the current markets. They've entered some uncertain times here, to say the least. We've had quite the run up here since around April last year. And you can see how in the SPY anyway, we've hit this area of resistance where the prices are pretty much stalling at around the 690 level. And since then, as you can see, the prices have really tailed off. So of course, we can really only kind of wait and see kind of what happens to see if we're hitting a little bottom here, or who knows what, to say the least, at this point. So the turtle system, the nice thing about this one is that you already have a number of tools already built into your MetaStock program. Everybody has this if they have MetaStock. And so the first one we're going to take a look at is the turtle indicators that are included. So I'm going to go ahead and just type in turtle, for example. Oops, let's try that one more time. And I'll type in turtle. All right, so when you type in turtle up here, you'll notice that what you're looking for is this one right here, which is called the Turtle Trader Bands by MetaStock. These other two right here, the LMS formulas right here, these are ones that I've created here, and I'll talk more about those here in just a minute. But the one I want you to get started with is this one right here. It's just called the Turtle Trader Bands by MetaStock. And what we'll do is we'll go ahead and let's go ahead and try that one more time. I'm going to open this up. I'm going to grab that, and I'm going to drag it directly on top of the price bars. Make sure those price bars change color like that. Let go of my mouse button. And then this dialog here, what you want to do is you can then choose if you want to go or basically plot this for long positions and or short positions. Now, if you want to look for long positions, you'd enter a 1 in this first box. And then the look back periods is talking about the length or the type of highs that we're looking for. So we're going to start with just the defaults here of 1 for a long position and 20 for the look back. We'll click on OK. And then what's important here is that when you plot this indicator, that you merge it with the price scale. Now, in this case, or my case, I've got the price scale over here on the right. So I'm going to go ahead and choose to merge it with a scale on the right and click on OK. And by doing it that way, then it should be plotted correctly. If you don't plot it correctly, you're going to have troubles because the prices are going to kind of, or the indicator itself will be kind of floating around on the price chart as you're zooming in and zooming out. So if that happens, just delete the indicator, replot it, and just pay attention to merging it with the price scale itself. All right, so the turtle trader bands are a trending type of trading strategy. And the idea is that with any type of trending type of strategy, whether it be in moving averages or, in this case, price channels and so forth, when these things are really going to shine is when the prices tend to trend. When the prices get caught in sideways or what we call like channels and so forth, that's where those types of trading strategies struggle. But as you can see here, during this upward move here from April of last year up until somewhere around in October here, you could see that if you were long in this type of position here, this is a beautiful trade. And then vice versa, if I kind of zoom out here a little bit further, you can also see that, for example, in a downward move, something like this could be useful as well. Now, for downward moves, of course, what we'd want to do is we'd want to change this, and I'll do that here in just a second. Now, another thing that'll help you too that's already built into your program that you can access is if you go up here and click on the Expert Advisor, and then scroll down down to the bottom of this list here, you'll find a Expert Advisor already included in your program here, which is called the Turtle Trader Hybrid Method by MetaStock. Just go ahead and select that. And then over here on the right-hand side, if you click on this button right here, which is Edit, this is going to open up what's called the editor here. And what you want to do inside this dialog here is navigate to this tab right here, which is called Symbols. This is what's going to allow you to control what symbols are going to be placed on your chart. Now, what I'd recommend that you do to get started with is if everything's selected like this, go ahead and click on the uncheck. So everything's unselected. And then just click on Buy and then click on Sell. So just those two right there. Click on OK, click on Attach, and then click on Close. Now, what this is going to do is this is going to put a bunch of buy signals here on your chart. And along with, you'll notice if you take a close look, there's these little circles here with number 10 inside of it. So let's kind of zoom in here. And we'll just take a look at, for example, like this little area right here. Maybe something like this, for example. Take a little bit closer look. Okay, so how this system is actually programmed into your MetaStock program is that when you place these bands on here and you attach the Expert Advisor, by default, it's going to be looking at 20-day highs and then a 10-day low on a daily chart. And the idea is that this upper line represents the highest that the prices have been over the last 20 bars. So the way that the system is built into MetaStock is that if the prices trade above that upper line, like they did right here, you'll get an upward pointing buy arrow. Then if the prices then trade below that upper line and then cross back up through that upper line, you'll get another buy signal. So that's why you'll see that when you plot this on here, you'll see a number of different buy signals here, for example, like on an upward trend, because the prices are again trading below that upper band and then crossing back up again. Now, in addition to that, you'll see that like we've got a couple little marks here or circles, I should say, that have the number 10 in it. What these represent is that the prices are trading below this lower band, so this is a possible exit. 10 represents the number of periods of this lower band. So again, 20 for the upper band, 10 for the lower band. And this is again just saying that the prices violated that lower band. Now, the other thing you'll notice too is that if you go back up here to your Expert Advisor here, we'll go ahead and open it back up, and then I'll click on the Edit button. All right. And then let's go ahead and unselect these two and let's click on Short. And then if you want to look at for short signals, what you want to do is select the short and then select the cover. So that'll close out your short signals is the one that's called cover. Click on OK, click on Close. And now we have just the opposite. So for now, let's take a look at a downward move. So in this case now what we're looking at is this lower band is representing the lowest that the prices have been over the last 20 bars. And if the prices trade down below that lower band, that's where you're going to get a downward pointing red arrow. If the prices then trade above that lower band and then go back down again, then you get another sell signal there, just like this one. Okay. So Then as we just kind of move down here, then you'll see also we do have some different cell signals here marked with a 10. And I'm going to show you a number of different things here where I've made some modifications because I'm just some of the things that I've noticed about it that I think possibly could be improved. So anyway, so for short signals, all you do is you just switch it. So again, the bottom band here is, oh, actually we do need to adjust that, don't we? Need to click on that. That's the mistake I made, is I need to change this to a 2. There we go. Let's try that again. There we go. That makes a little bit more sense. So anyway, so we have downward pointing arrows and a downward move. And the reason why we have an exit signal here is because it's trading up above that upper band, or broke that band at that point. And again, then you see some more continuation signals to the downside. All right. So let's go ahead and change that back. I'm going to go ahead. I'm primarily just going to be looking at long signals today. I know that the vast majority of the traders that I speak with are usually a little bit newer and so forth, but the vast majority of the traders I speak with trade to the long side. So that's primarily what I'll concentrate on here today. So I'll click on that. We'll change this back to long only, and then I'll go back into our expert advisor, and then I'm going to select this, go back into the edit, and then I'm going to change this back to a buy and also a sell. And then one other thing that I'm going to add to this is I'm going to add what's called a sell stop. Okay, so now I have a buy, a sell stop, and a sell. We'll click on OK, click on close. All right, and now let's kind of move over here and make sure I've got this set up this time. Make sure I'm not got this correct. Okay, so it looks like I do. So now you'll see that, for example, what I've got here is, again, we've got this upward move. The price is moving up. We've got a number of different buy signals. We have a stop because the price is traded below this lower band. But then what you'll notice here is that then you'll get some signals like right here, for example, where this price bar didn't break that lower band, but you still got a stop signal. And the question is why did you get a stop signal at this point? So that happened there. And again, it happened right here as well. And the answer is because the other type of stop that they talked about is what's called an ATR, or an average true range stop. So the average true range is another indicator that can be plotted on your chart, but unfortunately, it's not included with the system visually. So what I did is I went ahead and created one for you. So any of our students that learn MetaStock have access to this. So to find any of the formulas from Learn MetaStock, when you go to your indicator quick list, if you just type in LMS, for example, that's going to show you all the formulas that I've created. I always start my formulas and systems with LMS, which is an abbreviation for Learn MetaStock. So I'm going to scroll down our list here a little bit. And the indicator I want to plot next is this one right there, which is called the LMS Turtle Sell Stop. So I'm going to drag this on top of our price bars, and we'll just leave everything like that. We'll click on OK. And again, it's very important that you merge it with a scale so it's plotted correctly, and click on OK. So now you can see visually why the system exited out at this point. And the answer is because the price is traded below the average true range stop there. So you can see that that happened at this point. And again, it happened at this bar right here as well. Okay. All right. So now, after kind of learning how the system works and so forth, then you might start to question, well, how good of a trading strategy is this? Because if we look at this in different types of markets, obviously it appears like it does really well, of course, when the markets are trending. But like with any trending type of strategy, of course, when the markets get flat or get caught in these channels, this is where these types of strategies really kind of struggle. So the question is, again, is how good of a trading strategy is this? So we could obviously go through and we could manually take a look at the signals and try to figure it out this way, or you can use the system tester that you have also inside your MetaStock program. So what you can do here is that if you go over your system tester, and then inside here, go ahead and scroll down through this list. Again, you've got a lot of pre-written system tests available here for you. But if you scroll all the way down here to the bottom, you'll find a system test inside your program, which is called the Turtle Trader Hybrid Method by MetaStock. And by the way, you'll notice that the title always says hybrid method by MetaStock. And the question might be is, well, why is that exactly? And in my opinion, again, this is just a guess, but I think it's a pretty good guess. And that is the original rules of this trading strategy is that they only entered into a long trade if the previous trade was a losing trade. And this system test doesn't do that. And they also increase the size of the positions if it was profitable. And this system doesn't do that. And they also change the size of the trades based on the volatility of the markets. And again, this system doesn't do that. And for that reason, I think, this is just kind of a straightforward type of system test is what you're going to see that's going to buy based off of the actual channels and also, of course, using a couple of the different stops there. So to test it, just go ahead and select it. And then over here on the right-hand side, I'll tell it to go long only. We're going to test just daily data. So I'll tell it to go back 1,250 records, which is approximately about 5 years of time. And then for our trade options, let's go through this quickly so I can show you how I got mine set up. So I'm going to go to the account tab here. And what you'll notice here is that I'm going to run a points only test. Now, a points only test is just going to return back a raw number of points that were gained or lost. So for example, like if you bought in at a security that, you bought in at $55, for example, and it sells at $65, the points only test is just going to return back and say, hey, you gained or basically made 10 points. That's it. It's not going to take into account any type of dollar amount. So I like using the points only test because it's very, very easy to compare the results against each other. And then also, if you're using dollar amounts, then other things can come into play that can make it a little bit more difficult to compare results. So initially, when I do my system testing, I generally just do points only test, but take it for what it's worth. That's just my take on it. So on the broker side here, you'll see by choosing a points only test, it takes out of the equation any type of interest rates and any type of margin requirements are not included. I've got my commissions set up to be 0. And then for my trade execution here, you'll see that I've got everything set to trade at the opening price with a 1-period delay, meaning that if I get a buy signal on Wednesday, looking at end of day data, this is going to simulate that I got in at the opening on Thursday. Okay, so everything's going to be delayed by 1 bar. So we'll click on OK. And let's go ahead and run that system test. I'll go ahead and select it, make sure I've got that highlighted. Up here at the top, I'll put in a symbol, put in the symbol SPY, and I'll leave everything the same. And we'll just click on our Start System Test down here at the bottom. And then down here in the lower right-hand corner, when it's finished, we just click on View Report, and we can see how well or how poorly this trading strategy actually performed. Okay, so here's what we've got. We tested basically 5 years of data, and it generated a little over 87 points. So is that good? Is that bad? Well, the first thing I typically look at real quick is this buy and hold. The buy and hold was 255. Meaning that over that same time period that I tested this strategy, if I would have literally have just bought the security and held on to it for that entire time and not done a thing, I'd be up 255 points. But in this example, if I chose to trade it using the turtle system that's built into this one, I'd be up 87 points. So initially, a lot of times people look at this and say, wow, why would I even go any further? I mean, that sounds terrible. I'm just going to buy a lot of these things and just hang on to it. And of course you can, but there's other things that you probably want to take a look at here before you jump to too many conclusions. The other thing I'll take a look at here are the total number of trades. There were 35 total trades, for example. There were out of those 35 trades, there were 13 winning trades. So that means we had 22 losing trades. So 13 winners, 22 losers. And our average profit was 18.1 points, and our average loss was 6.7. So right here, we've got a problem here that, again, we have a lot more losing trades and winning trades. That's a problem, number one. But number two, what we also need to really take a look at here that I think is actually even more important of winning versus losing trades is the average profit versus the average loss. And in this case, this is actually very good. The average profit is substantially larger than the average loss. And this is a concept that I think is very, very important. And the idea here is that when you're developing or looking at different types of trading strategies, it's very, very important that your average winner is substantially larger than your average loser. And the reason being is that we never know when our next loser is going to be, and we don't know how many losers we're going to have back to back, for example, before we have a winning trade. But if our average winning trade is substantially larger than our average losing trade, we can be wrong a lot more often than we're right and still make very good money with a trading strategy like that. So this, again, is a really nice ratio here, 18-6, for example. Again, that's almost 3-1 there. So in this case, for example, the problem why we probably didn't do that great is because we had so many losing trades here. Okay. The other thing I like to take a quick look at here too as well is this number right here, this out of market timing. You'll see in this case, we were out of the market 653 bars. So if we go back up here to the very top, we tested, or the range of data that we tested was 1,250 bars. If we were out of the market 653 bars, that means that we generated this 87 points in about, what, 2.5 years, right? So yeah, about 2.5 years, because this one, it took a full 5 years to generate 255 points. So in other words, again, we generated 87 points, but we were only exposed in the market for 2.5 years. So that changes this number quite a bit, in my opinion. Now, it doesn't make up for this difference, but it does make a difference, though. Okay, so that's another thing we like to take a look at. And then this button right down here at the bottom, if you click on the plot on chart, this will show us the actual signals here on our chart here as well. So again, let's kind of zoom in here, just maybe like on this whole area here that we were looking at before. And as you can see, the chart's really getting busy here. We got a lot of stuff going on here. So what I'm going to do is I'm going to clean it up here a little bit. So first thing I'll do is I'll right click on our chart. We'll go to our expert advisor and we'll click on detach and get rid of that. And then if we also want to get rid of anything else like the ATR or something like that, we can do that as well. So what I want to take a look at here, or what I kind of want to point out here, is just some of these different signals. So let me kind of go back here. Okay, so let's take a look, for example. Actually, this is actually pretty good. So let me kind of move over here. Okay, so here's a buy signal right here, for example, in this case on August 26th. So the question is, why do we buy here? So you'll notice that this bar traded below that upper line, but the bar before that did. So why did we get a buy signal 2 bars after that point? And then same thing with this one right here. We got a buy signal here, but the the price is crossed up above that upper line, 2 bars before that. So it looks like there's a pretty serious delay going on here between the signals and when the price is traded above that upper line, for example. So one thing that I would do, or one thing I did initially, is I went back into our system test, and what we'll do is we'll rerun this. I'll go to my trade options, and then I'm going to go to the trade execution tab up here, and I'm going to change that delay to 0 and then click on OK. Because now if I get a buy signal, I want to basically get in at that point, or I want to speed up those signals because, again, it just doesn't appear to be correct. So we'll click on OK. And then to rerun it, I'll select it. We'll put in our symbol of SPY again, and we'll go ahead and start it. Click on our start system test. And I'm gonna be running a number of system tests, so I'm just gonna keep the settings all the same. If I make any changes, I'll let you know. Otherwise, I'll just kind of keep running those same system tests over and over again. Okay, so now we're at 69 points. So this time by making that change, now we're at 40 trades. We had 15 winners and 25 losers. The average profit was 15.3 and the average loss is 6.4. So that ratio got worse. And again, now we're only at 69 points. We'll click on the plot on chart and let's go ahead and close down this dialog and let's take a look at these signals. And now you can see here, even though I put in a delay of 0, as you can see, like this bar, it traded above this upper line, and then we got in 1 bar after that point. This one traded above that upper line, and we got in 1 bar after that. So, and then you can see like right here, for example, we got out of this trade. And then the question is, well, why did we get out here? I don't see that it actually violated this stop, and I don't see that it violated the lower band. So a number of things here that I was looking at it and I was like, oh, maybe we could try to improve on this a little bit. So that's exactly what I decided to do first. Is I decided to go ahead and create some different tests and basically rewrite the rules and see if I can make some tweaks here to possibly improve on this a little bit. So we're going to go back into our system tester here again, and we'll unselect that one. And up here at the search dialog, I'll type in LMS so I can get all my formulas or systems here together. And you'll notice that if you scroll down to the bottom here, you'll see that there's 4 different system tests now. There's a LMS Turtle Trader 1, 2, 3, and 4. So the first one we're going to take a look at here is this one, which is the Turtle Trader number 1, which enters and exits strictly on the bands themselves. So in other words, what it's going to do, it's going to basically just buy if the prices go above that upper band, and we're going to sell if the prices go down below the lower band, period. That's all we're going to do. All right. And the other thing we're going to do too is the concept is that in our chart, for example, is that you'll notice that if you were following this trading strategy, and let's say that you were going to be bullish during this upward move, you know exactly where you're going to be entering the trade because this line is being plotted here on your chart. You know that if the prices go above this value, which in this case is 639.85, you can place a buy stop with your broker and enter into the trade as soon as the prices go through that level. So instead of waiting for the prices to go through that level and then buying it, let's just buy it as soon as the prices break that level, for example. So that's exactly what this system test does. It buys strictly based off those bands as soon as the prices violate them. So I'll go ahead and select it up here at the very top. We'll put in our symbol of SPY, and we'll go ahead and click on our Start System Test. And when it's finished, we'll click on our View Report. And by making that change right there, that made a pretty big difference here. You can see now our profit has jumped up quite a bit to 152. We have 32 total trades with 16 winning trades and 16 losing trades. So half and half, 50%. But our average profit, again, a really nice 17.3, and the average loss is 7.7. So as you can see, it's a little bit better than a 2-to-1 ratio, which is still good. But the higher that ratio, of course, the better. The other thing I'll take a look at, scroll down here a little bit, you can see that we're also out of the market over 600 bars, meaning that we generated 152 points being in the market 2.5 years. And in order to generate 255 points, you had to be fully invested for 5 years. So again, this did this in half the time that it did to actually create the 255. Then we'll click on the plot on chart, take a look at some of these signals. We'll close this down. And then what we're looking at here is we just want to make sure that this is buying exactly as soon as that price goes through that level that it's buying at that time. So to verify it, if you hover over these numbers, for example, you'll see that this is position or trade number 28. It traded 1 share, 1 unit at 639.85. So to figure out to see if that's accurate, for example, if you hover over, for example, the price bar itself, let's go ahead and do that. You'll see all these different prices. And this, again, it entered at 639.85. How did it get in at that price? Well, that's the value of this line right here. And you see the value is 639.85. So that entered at that price. And then we'll just kind of go this way. And then here, for example, this is a kind of a weird bar, but I'll explain this here in just a sec. But in this case, for example, you'll see that that lower value is 657.88. Well, if you hover over there, you'll see that that's the price that it exited out at. Now, the reason why this is a weird bar is because this one bar actually went through the upper level and also the lower level on the same day, for example. So again, a very kind of strange, situation for that one, a very, very volatile bar here. But as you can see, you can then verify it here with any of these other signals here, on previous trades. All right. So that strategy there, or that system test, what that did is that bought and sold strictly off of the bands themselves. So then, of course, then we start thinking, well, gosh, what other combinations, what other things could we do? So the next thing I looked at here is trading off of just the ATR, the average true range, meaning that if I get a buy signal and the prices go above this upper band, we'll buy the security, but we're going to ignore the lower band and we're just going to get out based off of the ATR, because I notice a lot of times the ATR just kind of rides through the middle of this channel. So then the question is, well, maybe that'll improve our trading strategy. So let's try that. So we'll go ahead and put the SPY back in here. I'm going to keep everything the same. We'll click on our start system test. And then when that's finished, we'll click on our view report. Okay, by doing that, now it looks like our profit dropped to 82 points. So then the question, this is kind of what happens a lot of times. This is where it's interesting. It's also frustrating. It's a lot of things when you start to dive into these different things, because you think, oh man, if I could just, put in some type of a tighter stop, I'm going to do a, whole heck of a lot better, for example. And a lot of times it actually changes things in ways that you usually don't think about. So in this case, for example, this is basically just exiting based on the average true range. And by doing that, we had 36 trades, we had 14 winners, 22 losers. The average profit about the same as the previous one, 17 and 7. And same thing, we're out of the market 614 bars, so half the time. So we'll click on our plot on chart. And let's close this down here. And then to see that one, I'm going to go up here and I'm going to grab that turtle sell stop. And we're going to drag that on our chart here and click on OK. All right. And make sure and merge it with our scale. Click on OK. Okay. And now as I kind of scroll forward here a little bit, and you can see that's why this trade got out at this point, is because this bar traded below that the ATR at this point. And again, same thing like right here, you can see trade number 31, it exited at 657.03. And if you hover over that ATR, you'll see that that's exactly what that value is. So the nice thing about that though, is that when you enter into the trades and you plot the indicators like this, you know exactly where you're going to be getting in, exactly where you're going to be getting out. But in this case, for example, by adding this average true range as an exit, in this case, it didn't improve our results. So then I went back to our system tester and I said, okay, well, let's go ahead and rerun this, but let's base it on either the ATR or the lower band, for example. So for example, if the prices come down and they hit the ATR before they hit the lower band, let's get out at that point. Otherwise, we'll get out based off the lower band. So again, either one. We'll go ahead and run this one real quick, and we'll go ahead and start our system test and click on view report. And you can see that by making that change, that improved our results. So that came up to 121 points. Not as good as our first one, but better. So we're back up to 121 points. We had 37 total trades, 16 winners, 21 losers. The average profit 15.9, basically 16 points, and the average loss 6.3. So again, nice ratio. And then down here at the bottom, we are out of the market half the time again. All right. So then the question became, well, hold it. Maybe we should reconsider these actual bands themselves. That seems like that's the best strategy, is just looking to buy if the prices go above the upper band and sell or get out of a trade if the prices go down below the lower band. But maybe using a 20 at the top and a 10 at the bottom maybe isn't the right length. Maybe I should try a 10 or 15 or maybe a 50. I don't know. Just try some different ones. So for that reason, I created a fourth system test, which is an optimization. So this last one here, I'll go ahead and start this one. We'll go ahead and put in the SPY here. And we'll start this one. We'll click on our start system test. This one's going to run through 250 different combinations. And what I told it to do is I told it to test a range of data for that upper band and a range of data for the lower band, and show me the results, and then allow me to sort through those results to figure out which one I possibly might want to use. So by doing this, as you can see here, we're going to have a lot of different information that we can go through. So when it's finished, we click on view report. And when you run it, you should end up with something like this. Now, as you can see here, every single bar we've got up here is green. So we ran through 250 different combinations or length of bands to test here. And by looking at this, it looks like everything tested profitably. And the answer is that really true? And the answer is not necessarily. And the reason being is that when you run an optimization in MetaStock, it keeps 100 of the most profitable system test results. What we did in this case is we ran 250 different combinations. So there's a very high likelihood that we had, losing trades, but this again is just showing us 100 of the most profitable. So keep that in mind when looking at results like this. So now in this report here, we can then sort on any of these columns. So of course, most people just want to sort on the net profit. So that's what we'll take a quick look at. So the most profitable combination, as you can see here, generated over almost 224 points. It had 20 total trades. It had 11 winning trades and 9 losing trades. And the average profit to average loss was 2.42. So again, what this means is that for every point that I lost on a losing trade, I made 2.4 points on a winning trade. So really nice ratio. That's the kind of thing that I'm interested in taking a closer look at. So over here on the far right hand side, this will tell you what length or what it used for those bands. So 12 or OPT1 represents our upper band and OPT2 represents the lower band. So this one, in order to generate 223 points, it used 12 for the upper band and 20 for the lower band. So let me just stop here for just a second and just talk about optimization, because optimization is one thing you have to be careful about. And the reason why you have to be careful is that in this case, for example, I sorted just on the most profitable system test results. And the problem with this is that a lot of people then extrapolate this information and say, well, I'm just going to use 12 and 20 going forward in the future, and I'm expecting to do very well because I've tested it. This works the best and so forth. What we're looking at here is we're looking at the best of the best over that time period that we tested or the last 5 years. So if the markets going forward behave like the markets that I just tested over the last 5 years, if they behave exactly like what we just tested, yeah, this is the kind of result that you could expect. But if the markets change over the next 5 years, this is where you're going to see a big difference. It could be up, it could be down, to say the least. So then the question is, well, how do we use this information then if that's the case? One of my suggestions, take it for what it's worth. One thing that I recommend people to do is I recommend them to actually do or create their own what I call walk forward testing. Walk forward testing, what that means is that you go backward in time and you create a trading strategy on a block of data. And let's say we went back 5, 10 years, whatever, and we create a trading strategy. We lock in the parameters at that time. And let's just say that we came up with 12 and 20. Those are the parameters that we want to use. So then what we do is then we test that same strategy using those 12 and 20 parameters, for example, on another block of data that the system hasn't seen. And then we take a look and see how the system performed on that other block of data. And the more that we can do this over different blocks of data, that's going to give us much better information about how it might perform in different types of market conditions. And then, of course, what also is extremely important is that when you're doing this testing, is that you test it in good markets and in bad markets and flash crashes and COVID markets. I mean, literally throw as much as you can at it and see how it performs. And the more objective that you are in doing this, hopefully you'll create that much more of a robust trading strategy. So again, that's my 2 cents. Take it for what it's worth. All right, so let's keep going forward here. I'll just kind of open this up just so we can take a quick look here. So again, this one generated 223 points, buy and hold 255, so close to the buy and hold. It traded 20 times. It had 11 winning trades and 9 losing trades. The average winner was over 30.7 points, and the average loss 12.7 points. So again, real nice ratio. And down here at the bottom, you can see that in this case, we're actually in the market a little bit more with this strategy. And we're in the market 400, or out of the market 400 bars. So that means that we're out of the market about, you can roughly figure about 250 trading days in a year. So it's about a year and a half, meaning that you generated 223 points, or it's basically 224 points in about 3.5 years. And again, to generate 255, you'd be fully invested for 5 years. So again, keep that in mind. And then of course, then you can click on your plot on chart, take a look at the signals, and then close this down. And we can see exactly where this thing, for example, bought and sold off this information. Now, here's the hitch with this, is that when you run a system test and you change the length of these bands here, when you go to change these lengths here of the MetaStock bands, you only have a choice here for the look back period here, which is going to change based either long and or short of this, the top band. If you're, for example, like looking for a long position and I change this to anything else, it only refers to that long or that upper band. So to help get around this, what I did is I created another indicator here. And this one is the Turtle Bands adjustable indicator. So you just drag this one on top of your chart, and this one will allow you to choose the length of each individual band. So for example, like I'll change the upper band to, in this case, 12, for example, and then change the lower band to 20, click on OK, and then merge it with your scale, click on OK. And then of course, then that'll plot the bands correctly. And you can see exactly why, for example, we got long at that point. So now what's interesting about this combination, by running these different types of system tests, the default is just 20 for the top and 10 for the bottom. But by running that system test, that literally flipped it on its head. Now we're using the shorter term band for the buy signals and the longer term band for possible sell signals. And then of course, then you can go through and just make sure that, you know, your signals are being generated correctly and see how it goes. So for example, like using that strategy, or basically, you know, just using those numbers, I should say, as you can see here, this is a trend following type of strategy. If you were using that during this period of time, you would have gotten in here. But as I was stating earlier, you know, the SPY really hit an area of resistance here around the 690 level here. And you would have gotten out here. But the nice thing about it, it would have also have kept you out of a long trade, of course, during this recent market turn, the market turning down there as well. So same thing, if we go back here to this section here, you can see again, we had an area here where it was hitting an area of resistance, you know, and based on these settings here, it would have gotten you out here and you would have missed out on this drop right there as well. So it's an interesting concept. It's a very simple, straightforward type of trading strategy that you can modify and use however you see fit. So a couple other things that I helped are also created as well to go along with this trading strategy here. Is one thing is I created an expert advisor. So let's go ahead and let's get rid of these buy and sell signals here first of all. And a quick way to clean up your chart is to click on the edit button up here at the top, click on delete all, and then you can choose what you want to remove from your chart. So I'm going to click on symbols. I want to remove the symbols. We'll click on OK, and that'll get rid of those buy and sell signals from our system test. So I'll go back up, excuse me, to our expert advisor, and I'll do a search on LMS. And then now I'm going to grab the LMS Turtle system. I'll select that. I'll click on the edit button. And then what you want to do is you want to navigate over here to your symbols tab, and you'll see that I've got a long signal, long exit, short signal, and a short exit. So we'll take a look at our long signals. And the other thing you'll want to do is that if you open each one up, you can then adjust the upper and lower bands. So for example, like I'll change the upper band to 12, and I'll change the lower band to 20, just for this example. And we'll do the same thing with the exit there as well. So I'll make the upper band 12 and then the lower band 20, and click on OK, click on OK, and click on attach. And so that'll give you the signals here on your chart, for example, basically buying buying and or selling on whatever parameters that you put into the system there. So there's your entry, and you have an exit, another entry here, you have an exit over here, and so forth. All right. And then one other thing that I created that you can download as well is an exploration. And the exploration, you'll go ahead and select that. I'll type in LMS. And like the other systems, this one's just called the LMS Turtle Band Exploration. And let's go ahead and open it up here. And let me just show you just real quick. If you want to change the length of the upper or the lower bands, you just go to these two tabs here, and then you just change them to whatever you want. I'll just leave this as a default of the upper band of 20 and then the lower band of 10, for example, just for this example. But we'll click on OK. And then to run it, just click on it. Make sure you have it selected. Choose a database down here at the bottom. I'll choose the Dow Industrial 30 stocks, and then choose how much data you want to load, for example, and then click on your Start Exploration. All right. So this will just run through the Dow 30 stocks. We'll just see if we get any hits, for example, on this exploration. So the way that you interpret this scan here, this report, is you're looking for any signals underneath the upper and or the lower column. And if you click on it, excuse me, is that you can then select anything that has a 1 in it for a buy signal. So for example, as you can see, Costco has a 1 in here for a buy signal. So I'll go ahead and select it. And then for a sell signal, or basically a security trading below a level of 10, we'll select that. And you can see Coca-Cola is coming up as a possible signal there. So I'll go ahead and select that and open up that chart there as well. And we'll just close down this report. And then, of course, then you just plot the bands. So for example, like I'll just grab those bands again. We'll drag it here on top of our chart. And this case, I did the scan on just the 20 and 10. So I'll leave that. We'll click on OK, and then click on OK. And then as you can see here, that'll plot your bands. So in this case, for example, on Coke, for example, you can see the reason why this is getting a signal right here is because on this last bar here, Coke is violating that lower band right there. So if you were using something like this, applying this on this chart, look at this. I mean, Coke had a beautiful move right through here. And as you can see, when it hit the top and then started trading below the lower band, you can see how Coke has fallen off since then as well. So that exploration will help you find those types of securities, trading or breaking through those different bands here for you. And again, you can adjust it to any levels that you like. So that's what I have here for you. So if it's okay, I'd just like to very quickly, I'll just kind of go through a couple things, what we offer here at Learn MetaStock. Here at Learn MetaStock, we're just here to help you with your MetaStock program. We've been doing this for a long, long time. So we've got a pretty good idea how most of this stuff works and how we can help you. And the way that we do this is that once you become a subscriber to Learn MetaStock, is that you can we do up to 3 live classes per week. And that if you click on this live classes here, this will just kind of show us our schedule here. But you just kind of scroll down. And for example, like yesterday, we did a test, a webinar here on the Turtle system. Today, we normally hold these classes, by the way, at noon. And of course, I'm doing this one today live from MetaStock, so we didn't have a class today. But tomorrow, for example, we're doing a class on Formula Writing 4. So we have a lot of different levels of training available for you. And this is a very advanced class that we're doing tomorrow, by the way. But anyway, for those of you who really want to get into it, we've got a lot of stuff here for you. Where most of the people take their time or actually spend most of the time in Learn MetaStock is in this section right here, which is called the video library. And in here we have, gosh, I don't even know how many videos we have in here anymore, 100 and some videos. But right here, if you're new to MetaStock, or even if you're not new to MetaStock and you really kind of want to, figure out this thing a little bit more, everywhere that I tell everyone to begin at the same place, and that is this section, which is called Getting Started. And go down here to these videos right here, the Introduction MetaStock Part 1, Part 2, and then the next step into MetaStock. Watch these 3 videos and pay attention to each one individually. I mean, just really take your time with these 3. And if you just spend time on just those 3 videos, from that point forward, you can go in any direction that you want. I mean, then you can go into more of an advanced, type of class and see how these different things fit together. We have a number of other videos just on particular points, or different things to do, with the MetaStock program. And for those of you who possibly might be interested or don't live here in the US, or your schedule doesn't permit, you can't meet, at noon during the weekdays, for example, we record all of our live sessions as well. And we always post the previous week's live classes to the website. And those are all posted up underneath the live class recording. So you'll never miss anything. Plus, in addition to that, we have the full library on any of these subjects. So for example, like maybe you're interested on trend lines and learning how to use those in your program. Not only will, if we did a class on it, you could view it here, but you can also go down here through and you'll find it in this section here. Up here at the very top, there's a search dialog where you can search for anything that you'd like. In addition to that, we also have a number of short training tools here of drawing tools. And in these drawing tools, for example, the nice thing about these drawing tools here is that inside your MetaStock program, you've got a lot of different tools and indicators available here for you. But what we did here is inside your MetaStock program. In fact, let me just jump over here for just a second. Let me just show you. Inside your chart over here on the left-hand side, you've got a lot of tools over here on the left-hand side, and you have a lot of tools over here on the right-hand side. Most people don't know what most of these things mean. So what we did is we actually created instructional videos on each one of those tools. They're available there for you. And these are just short little how-to videos explaining what these tools are and very quickly how to possibly use them, for your use there. Underneath that, we have, videos on all the different sections having to do with MetaStock, system testing, stops, exploration, formula writing. I mean, take your pick. Where we get most people spend a lot of the time is underneath this section here. Is called the trading strategy section. And this is where we'll take a trading idea or strategy from a book, a magazine, website, whatever the case is, and we'll show you how to duplicate it inside the MetaStock program. And what this will do here is that when we do this, for example, like here's the recorded version of what we literally did today, the turtle trading system. If you want to download the formulas or the ones that I was showing you here today, what you do is just click on the video itself. And when this page opens up, you could, of course, then watch the video. But underneath here, this is where you can click on the links that'll allow you to download the formulas that I was showing you here today. So as you can see here, we've provide a lot of different types of training, and probably one of the biggest things for somebody who wants to learn more about this and really figure out how to put this thing together for themselves. I can't make a lot of promises, but the one promise I can make you is that by going through our training, I can save you a lot of time and effort, to say the least, because I've been through every little piece of this. And I put these things together, and especially downloading formulas like this, has taken me a long time, to say the least. And of course, it's all available there for you. So anyway, take your time going through here. And as always, if you have any questions, anything else that I can, of course, do to help you, please let me know. So with that being said, I'll go ahead and turn it back over to Greg.
Wow, that was amazing.
Well, thank you, Greg. Appreciate that.
You're welcome. I have to say, I don't, as the back end person, running the pushing back, I don't often get the opportunity to actually listen to the presentations as closely as I'd like. And I really was able to do that today. And here's a marketing note for you. Rather than calling it the MetaStock or Turtle Trader System, it just seems like a tutorial. You need to call it how to make the Turtle Trading System your own by looking at a system test and rejecting it, and looking at another system test and rejecting it, and then looking at another system test and rejecting it, and then really making it work and dialing it in. That's what you need to call your next presentation.
That's kind of wordy, but yeah, I'll go.
It's wordy. It's wordy. We could probably we'll work on this offline. We could narrow it down. But but in all seriousness, MetaStock themselves produce a lot of videos to help people get up and running, but they're never ever as meticulous and distill down to what really, really matters, but then also give you so much more as Kevin's are. And as you've probably already learned, he has a very natural style that he's very listenable, as we've said.
Good word.
And really, I can't give you enough praise, Kevin. So what we would like to tell you about now, let me go ahead and get my Kevin. Thank you so much for your presentation. You're welcome to stay around for about one more
thank
minute.
you. Yeah, are there any questions? Anything? I mean,
Oh,
I don't
thank
know
you
if
for
there's
asking
anything,
me.
by the way.
There are no questions. We do have quite a few people attending, but they're probably so mesmerized with your skills as a presenter.
Well, they can always.
No, but
That's the other
no one
thing too.
has
Is,
asked
just
questions. And you really, as I was looking at this, you answer all the questions that I anticipated before I could even ask them. So, again, great job.
Can I
Let me
just
go
say
ahead
one
and,
more thing before we go, real
yeah,
quick?
absolutely.
Yeah. So I think the last time I did this presentation is about a year ago, and one of the questions that I did come up with that was, could it be used on other time frames? For example, like I'm just showing you on a daily chart, for example, but this system, I mean, can literally be plotted on any time frame. 1 minute, 5 minutes, 10 minutes, weekly, monthly, doesn't make any difference. And the nice thing about being able to adjust those bands and so forth is that you can make those adjustments. You can fine tune it to, again, literally anything that you're trading. So anyway, that was just a question that came up previously. I don't know if we answered it at that time, but I wanted to just throw it in there.
That's a great question. One of the questions I had was sort of like that. I did notice that one of the things that I like that you did that I specifically appreciated and enjoyed is you don't take the system test at face value when it talks about when to pick up the trade. Because I usually, and I think a lot of people usually take that trade at the end of the period that they're looking at, not to the next period or the next day. I think a lot of people miss that when they're doing their system test. I think that was really something, a critical thing you pointed out, at least in this one system and your trading style. And I think you really also pointed out that different people have different trading styles, and that was really all just great stuff. So let's go ahead and talk really quick about how you can get Kevin's services. Excuse me, Kevin, just getting here. All right. So learnmetastock.com. You have 3 live training classes per week. They have hundreds of instructional videos, as Kevin explained. And in addition to the videos, and really, he's offered so many little tools and systems and custom built things that you can add to your library. It's just such an amazing deal for what he's asking. Also, you get 21 complete systems, including 9 templates, 62 indicators, 14 expert advisors, 28 system tests, 13 explorations. And the way that you can get this, first of all, it's $99 per month for the premium subscription. You can get 3 months access for the price of 1 just by going to metastock.com/learnmetastock 341. That's metastock.com/learnmetastock 341. Or give us a call at 800-882-3040 or metastock.com/sales chat. Also, if you don't have Metastock, you can, at this same website, get a free 1-month trial if you don't already have Metastock. And Kevin, is there anything else that I'm leaving out before we let you go?
No, that's good. That's really good. I appreciate it.
All right. Well, thanks so much, everyone. Thanks so much, Kevin. And we will get you on the next one. And everyone, successful trading and have a great day.